Good morning, everybody. Hey, and welcome to Christmas week. Countdown is here. Less than a week, and we will be celebrating Christmas. I hope that your week is going well. You got all your packages and Christmas gifts taken care of, and we're not getting a gift for sure when it comes to the markets. And we'll talk about that and more when Dave joins us here in just a minute. But before he does, let me just remind you of our process, the core retirement design that helps you calculate your risk, organize your goals, review the cost and the risk in your current portfolio, and then establish a risk optimized portfolio that matches up with your risk number. Give us a call at 863-382-0037 to sit down with us and start that process. It's that simple, folks. Hey, with that, we've got Dave coming up next. Stay tuned.
That be Kelly Clarkson there. I am Morning Dave. Glad you're here today. It's 8:40 now. 20 before 9. Let's check in. We'll see what's going on with your money on Wall Street. If your retirement is any time in the next 10, 12 years, you might be looking at things and going, don't worry. Just be prepared. Let's check in with Statler Financial Services' very own Phillip Statler, who's on the line. Phillip, good morning. I trust you had a good weekend.
We did, Dave. A good weekend. Hey, it's welcome to the week of Christmas, right? This is it, man. This is countdown. Got to get it done this week, or it's not going to get done.
Absolutely. And the Santa Claus rally appears to have been canceled thanks to the virus. Setting the table for the morning, Friday was just flat out bloody. The Dow was down 532 points. The S&P was down 48. NASDAQ actually was the gainer of the bunch, gaining meaning losing less than the other two. They were only down 10 3/4 on Friday, and that's just downright poopy, especially during a time of the year we expect the Santa Claus rally, right?
Yeah, I think the Santa Claus rally is gone. I think him and the reindeer took off. But you're right. But Dave, I hate to tell you, the NASDAQ's making up for it this morning.
Yeah, looking at my futures numbers, if mine are right this time, it's going to be kind of another grubby day again today. It's all based on, well, yeah, your reading is two things, and I didn't see the result of the second one. The obvious is COVID. Saturday Night Live went without a studio audience, and they canceled their musical guests on Saturday night, which is kind of a yawner. It's a sidebar, but that was indicative of the other junk going on in New York. Shut down a bunch of Broadway plays. I mean, my sports report this morning is almost a cancellation list in the NHL and the NBA. It just there's a panic going on over the Omicron variant, and yeah, it's evidently very contagious because it's biting a whole lot of people.
It is, Dave, and you and I have discussed this several times. Everything that we read, everything out there, the studies that have been done on Omicron, basically it is a faster spreading virus. However, it is not as effective, I guess you would say. It doesn't put you down as bad as the other two versions of COVID. So, less people are ending up in the hospital. I've only seen one reported death due to Omicron. So that's worldwide, not just here in the United States. So, I think the fear is that we'll shut down again, that we'll have lockdowns again. So I think that's a big deal right now with what we're seeing in the marketplace. But the other thing that came out Sunday on the news talk shows was Manchin. Manchin was on the radio or the TV circuit, and he basically said, I cannot vote for Biden's Build Back Better America. And I will not vote for it because I cannot tell my constituents why I would ever vote for that bill. And so because of that, that's put it dead in the water.
Yeah, it's pretty much killed him when you get a 50-50 Senate and one Democrat says absolutely not. The story is the advocates for the Build Back Better plan had basically cut the price back down to into the range that Manchin had said he was willing to support by simply putting sunset provisions in there. Okay, let's spend an extra $1 trillion on something. Oh, Manchin won't say yet? Well, let's just say we'll only do it for 3 years. And, basically Manchin called bull crud on that and said he wasn't going to vote for the thing. And this is the part that I didn't hear that you caught. To give you an idea of how big that bill was and how ambitious it was, Goldman Sachs cut their projection for our gross domestic product back based on one bill in Congress?
Yeah, Goldman came
What?
out and basically said the first quarter GDP, they originally had projected that number to be 3% increase in GDP. And because of Manchin's coming out this weekend, they basically have said that the GDP is going to drop from the 3% gain to a 2% gain in GDP. And so because of that, that upset the marketplace, along with the Omicron variant, along with all the stuff that goes with that, as far as, reduced travel. I mean, the travel industry is getting killed again this morning in terms of airlines and cruise ships, all down 2 and 3% this morning.
Oh yeah, it looks like a really crummy day for travel stocks today in general. Yeah, talking about the effective government spending on the gross domestic product, we do know that all of the relief bills that we put out, just checks after checks going out of the government as relief bill during the pandemic and after the shutdown. That did a lot of good to keep the gross domestic product going up. But still, I look at the idea that a major brokerage firm could look at our entire gross domestic product and say one spending bill on the government getting scuttled could make a 1% change in that GDP. My first reaction is, well, at the very least, Manchin had one thing right. It is awful dang big, and probably too dang big if it accounts for a full percentage of our gross domestic product in one bill.
Yeah, it really does. And so, I continue to see market turbulence is going to be here, I think, for the rest of this year, till we get through here, because we have limited trading days, right? The market's closed on Friday this week. The market will be closed next Friday for New Year's. So we have 2 short weeks back to back before we head out into 2022. It's hard to say those words, Dave, 2022, but it's going to be here. And I think we're going to see a bunch of volatility over this next 2 weeks until we get to 2022. And but I gotta say, Dave, I saw this headline: Elon Musk, he's going to help.
Oh, really?
Did you see his tax bill is going to be over $11 billion this year?
I'm so sorry for him. The upstroke to these short weeks and the volatility that happens is the big money guys. Generally, for the next 2 weeks, I would expect to probably do a flight to safety and just buy the living crud out of the government bonds in order to just park money where it isn't going to go anywhere while things are going up and down wildly, because they've only got 4 days to trade. Dumb stuff can happen over a 3-day weekend, and because they've got a bunch of fiduciary responsibilities, they aren't going to take that chance. So we're probably going to see downward pressure on bonds for quite some time to come.
I'm thinking so, because of that. I did see also, I can't see who it was right now, but there was one of the traders out there who basically said, there's more downward market pressure going to be applied. And he's saying don't buy the dip, but he's only one of a few, right? A lot of people are saying buy the dip and be ready for a rise in the market after the first of the year. Who's right? Nobody knows, right? So that's why you got to make sure that your risk allocation is properly allocated and you have enough safety in your portfolio so you don't have to worry about these ups and downs in the marketplace.
Absolutely. The thing that always needs to be brought forth is right now, okay, fine, the big money guys are taking it out of equity and just putting it into bonds for the time being. Money doesn't just disappear. It ends up looking for places where it can make more money. And whether or not buy the dip or don't buy the dip, or is this the bottom of the dip, nobody knows that. But one thing, anytime you go through a correction in the equities markets, it reflects a change in investment strategy. The money will come back into equities, but it'll be coming back probably into different stocks after these big money guys with the 7-digit research budgets figure out where they want to put their money. So, the corrections as often as not reflect a shift in strategies more than they actually represent a sell-off.
Well, that's true. I mean, they are selling off the market to go to safety right now, but that money will come back in when it finds the right place to put that money. So, that's the thing right now is looking at those things. And trying to see here. It looks like I'm just kind of thumbing back through some of the airlines and some of the cruise lines, and they're still down, oh, about 3% or so right now.
See Norwegian down over 4% just looking at my list of pre-trading on the cruises. I originally had Carnival on my list of pre-market reports. I suspect they probably decided to wait until the end of the day. That's probably why you couldn't find them, right?
I guess so. I just they weren't on my list actually anywhere for reports today.
Who in the heck wants to give guidance in the face of this when you're in the travel industry? It just doesn't work. Resetting the table again, there was an off day, a big off day on Friday, especially in the blue chips. And we're looking at more of the same today, 45 minutes before we open, Phillip. What are we looking at today?
A lot of red ink, Dave. A lot of red ink. We've got the Dow down right now 1.2%, the S&P 500 down 1.3%, the NASDAQ down 1.5%. And let's just throw the Russell 2000 in there too, down 1.65%. So everything is down. The VIX, the S&P 500 VIX is up almost 10% this morning. So the volatility is here. Commodity side is red as well. We've got silver down 1.4%, gold's down 0.5%, and crude oil is down 4.3%, Dave. That's $3.05 to $67.81 a barrel.
Yeah, I've always said every time we take a dip in the price of oil like that, I just wish it was for supply reasons instead of projected slower economic earnings, right?
Exactly, and we know that's it. They're projecting that people are going to travel less. We're heading into the holiday season, and because of Omicron, they feel like there'll be people deciding not to travel, or people who will come down with it who can't travel. So you'll have both scenarios that'll pop up.
They're definitely tamping down. And the overseas markets are pretty much reflecting the same thing. Japan closed over 2% down this morning. Rest of the Asian rim over 1% down at the close. Europe doing about the same thing. All of the major indexes over in Europe are down by more than 1% this morning. Thank you to our friendly neighborhood virus. Once again, Phillip, you can't control what goes on with your money because so much of it is outside of our control, and a lot of it isn't even economically based, kind of like the virus going around right now. How do I find you to get a little bit of stability and predictability into my retirement funds?
Dave, that's why we developed our core retirement design, is so that we can help people design the retirement they always dreamed of. It helps them identify where the risk spots are in their portfolio and allows them to reposition those things into something that's not going to be as risky. Give us a call at 863-382-0037 to walk through our core retirement design. Check out our website at statlerfinancial.com and then join us this weekend. I know it's Saturday. We'll still be on the air. If you get bored during Christmas, turn us on 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730 and 95.3 FM.
All righty. Yes, that's right. We will have our regular programming on News Talk, and I appreciate you being part of it, Phillip. You have a good day. We'll catch you tomorrow. We'll cross our fingers for a turnaround to some green ink in the morning. Fair enough?
All right, buddy. You have a great day.
You too. Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Are you near retirement and facing a layoff? You may.
Hey, folks, I want to thank you for joining us today. It is Christmas week. It is not a Christmas present we're seeing in the marketplace. Look, that's why it's so important that you walk through our core retirement design. Let us help you design the retirement you always dreamed of. Give us a call at 863-382-0037. Until tomorrow, take care. Bye now.